Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Tuesday, September the 16th, one step closer to the Fed meeting release, and we sit in a continually bullish environment. Last night we had a really great session on trading through tight cycles and watching volume. This morning, as we stare down the price action, we can see that the 4 a.m. candlestick that we normally have a peek at is holding as a floor in the ES. We have rolled to the December contract. The point difference between the December contract and the September contract is about, I think it's about 60 points. I can't remember. Not that that matters, but we could have a gap fill. 30, yeah, it's about 60 points. We could have a little bit of a gap fill between one contract and the next that could give us a fade in the early part of the day and give us a new position. The last 30 minutes of the trading day yesterday, with the high volume, because institutional traders continue to flatten into the end of the day and just begin at the new cycle. See, we're holding this edge. The support looks like the VWAP, and that number is 6,670. What do we anticipate today? Grinding upside motion should continue. I have a sneaky feeling that this is going to be a buy the rumor, sell the news event as we move up into the release, but I do not know. We could have another blow off top. The gamma walls are, for the call side, are very far to the north. They're sitting right up above 6,700. We'll see. We'll see what happens there. Let's draw a little Fibonacci on this 4 hour. Actually, no. Let's do it on the last 30 minutes of the trading day, where we have the most near-term volume to have a look at. And we can see that that call wall really sort of matches the 3.5 extension on the space. What do we notice? We're still retracing candlestick formations fairly well. This rotation up here from 6,675 all the way to 6,686 actually had very little rotation on it, but what we're staring down as support also is the value area high. So from a big picture perspective, if we lose 6,687, the next line in the sand would be 6,682. And so that might be pretty interesting. Let's just, for giggles, clone this 4 a.m. range and see where it puts us. And yes, that puts us right down around that 6,682, 6,678. We want to watch for that as we trade. You want to be totally focused. I was really transparent yesterday, talking about having a lack of focus, trying to do three things at once. I do have the attention span of a Cocker Spaniel's, and so that has a tendency to show its head when I'm not fully engaged. Right now, I do see a mean reversion into the base of this candlestick formation at 4 a.m. We can see that it's got a fair bit of price action associated with it. Old resistance, new support, trying to hold these edges. We'll see what happens today. All right. Now, if we fade deeper than these areas around 6,680, we will move to the point of control, and that's 6,676. And then that puts us on the inside. Sorry about that noise that you might be hearing. That is the cooling fan on one of my machines that is deciding to go insane. And so it sounds like crickets chirping in there. My apologies if you can hear that. All right. The low edge of the range is 6,668. Old resistance on a wick perspective looks to be around 6,662. But since there is not a lot of volume associated with that candlestick, we should fly in between this range if we come in that deep, which I doubt we will at this juncture. We look for catalysts and we don't really see any. We've got a lot of bullish pressure, and the put walls are very far below us, which I'm not sure what to make of that, other than, the traders aren't really moving them up dramatically at this juncture, and so we'll see. Let's move to the NQ, the Z contract here. Also, we have rolled. We've got the first 30-minute candlestick carrying a lot more volume than, well, I don't know, a lot more. It's carrying more volume than the last 30 minutes. We want to look at both of them. We want to make sure that we pay attention to the open and close of them, particularly if the wicks are very long, and the wicks actually aren't very long. So I think we'll be in good shape. Notice the low of the last 30-minute candlestick formation almost comes right into the high of the first 30-minute candlestick formation. I got to find a coder that will somehow highlight these high volume candlesticks and leave everything else alone. See what we can do about that. But this is what we're staring down. This morning, 4 a.m. candlestick, right? That's become very prevalent. We're seeing a lot of trading in the European markets with a fair bit of volume that we don't normally see. Here it is coming into the edge of that formation. That number's 24,600. The VWAP just below it is 24,590. That really should give us the bounce zone. We have a little bit of noise here, so you'd be really, to take a look at where the stop might be is important, but that's 20 points away. And so if you can get it closer to this very porous edge, it might be beneficial for you to trade from the bottom of the box at 602 to the top of the box at 640, right? So again, that range that we're staring down right now, 24,600, 24,640. I expect the traders to try and hold this floor. We have been seeing that a lot. Trend is up. Momentum is up. This is the first little red momentum we've had in a bit, but you do notice, using this multi-length oscillator, anytime it dips, it's just falling into a moving average and then holding up again. The entire day yesterday in the NQ showed outside volume, right? This entire formation is red. So is goldenrod. And so we're seeing a lot of price action that is outside the norm in tech. A lot of stuff going on there. Not sure if it's exit liquidity, not sure what's going on, but the entire range has been very bullish, and I find that to be crazy. Let me make sure. Maybe it's because of the contract roll, they're all this color. Perhaps. We'll just have to see, because certainly we know this with the U. It's not showing that. So it might be because of the contract roll that things look a little bit outsized. Okay, let's get back, make sure we have these levels in the NQ. Value area high, 24,560. It also shows as old resistance. Could measure up as its first test at new support. Maybe. Let's see if there's any release action coming. What is today? Tuesday. Yeah. We've got retail sales, 8:30. Import, export, industrial production. We have some bits here. And then, of course, the bill announcement. That's going to be pretty interesting in general to see. Whoops, that's the wrong space, friends. Wrong chart. Okay, we'll see what's going on here in the price action event. I would wait for the nice, beautiful dips to go long. That's never a bad thing when everything's trending up and still these candlesticks are retracing each other. So don't jump in and go, oh, I'm going to miss the move. No, just wait for it. If it doesn't come back to you, just remember the market's a buffet and you don't want a green bean and grape jelly sandwich on white bread to pick up. unless that's your bag. I think most of us are going to go swerve on that kind of sandwich. So let's just remember, we're looking for our favorite things to participate in. Don't let FOMO hijack the process-oriented part of your brain. All right, let's just look at the YM very quickly. I haven't been trading that much, but look at how different it looks, right? This looks very different to me. If you wanted to trade this with something dramatic, you know, for a breakdown, you could look at 46,150, but this is a very nice range-based formation where you can buy the dip. You could sell the rip, but you want to be really careful and get out of this trade if it closes any kind of 30-minute candle above 46,318. You just don't want any part of it on a short. It's going to shred you. Trend is still up, or at least this is my opinion from what the formation is telling me right now. Trend is up in general, a bit mixed. Momentum also mixed. We're rolling over. Everybody's getting their feet wet in the new contract. Dips or buys. I like the movement around 46,180 for the buy zone, and then a positive retest of that 46,320. Whoa, that's not rolled, so we're going to leave that one alone for now. That might be the V contract, actually. Yeah. And so for micro Bitcoin, same sort of thing, contract roll event, deep dips, easily could be buys. This is a mean reversion event. We're making lower highs and lower lows, so it's a flag pattern that's bringing in support zones. You know, I like looking at these areas where the VWAP closes on the day, and that's about 115,000. Price action is starting to look a bit healthier here, and so dip buying does look better there. The V contract here in oil, taking a look at oil, if we stare down that 4-hour chart, you can see we're still heading to the top of the range. 2 days ago, that was Friday, we had a big volume candlestick. Right here, we are still within range and within value inside of that 4-hour candlestick event. We've had a big selling candle that is still holding as the overall range. You'll notice in the overnight, we broke into that candlestick formation. We just did, and it's rocketed up to value area high. What is my thought? The $63.90 to $64, that's going to be a shorting mechanic that will pull us back to potentially a higher low. Momentum is largely bullish. Dips are buys. Remember, if momentum turns red, and we've got a big moving average and general formations that go low, higher low, higher low, higher low, it's usually a buy zone. Look to the left for heavy congestion and watch your volume. This 7 a.m. candlestick is very big right now. They are going to try and reject it because of this wick on September the 15th at 10:30. That was yesterday. I suspect they're still going to carry through because momentum is active and strong. So the dip here might give you the buy zone. The true shorting mechanic will likely come if we get a failed retest of this heavy congestion. Could you take a scalp short here? Absolutely. Go back, watch the video. You can see what scalp rotations look like for your setup. And of course, you know I mean the VIP video from last night. $62.92 value area low. $63 volume weighted average price. And POC, the point of control, $63.23. I still believe this chart is in a very wide range. The administration does not want this to rise, but the only way they can get more development is for it to rise, more oil and gas exploration. So we'll see where the rubber meets the road. Let's take a look at gold. Gold in the Z contract. It's been in the Z contract. I mean, this thing is just exploding to the north. I do not see it stopping at this juncture. We've got a very high volume candlestick. It just broke through on the 4 hour, broke through last night, and the high on that level is 3,715. That's going to be our new support zone. Currently, we are testing 3,736. If we fall into this, a Fibonacci is going to be necessary to see if we hold the 50% range of that volume formation. That's going to be 3,690. Notice we lost it here on the 10th, and we lost it here again on the 12th, and we recovered it yesterday, and just, I mean, like a bullet train, moved to the north. Volume is declining, so we should have a little bit of a rest period in some kind of mean reversion, but this might have been the only mean reversion we see. So 3,740, next line in the sand, and then 3,765 is what we are looking for in gold. This is a financial asset, folks. It is not physical gold. So you want to be careful if you're thinking this is going to be a hedge if the market decides it's, going to have a hiccup. This is a financial asset, and so it's going to fall like everything else if people have to make margin. That's very important for you to consider. All right, here we go with SPY. SPY breaking to the north, right? Holding, there is a gap, and that's, could be futures related, though not sure, right? The low there is $661.76. Could we fill the gap? Of course. Should we fill the gap? Yeah, we should fill the gap. People want gaps to be filled. You see this wick action here in the pre-market coming in, trying to fill the gap. But there are a lot of gaps that are still open if we only look at the opening and close for regular trading hours. The SPY has become very, very gappy. That's not ideal, but it is what it is. We run in the reins and we do what it is the market tells us. Now, if we can get into 659, that's going to make a great buy zone, top of the value area with two different regions. If it does not happen to hold that line at 659, we've got the point of control at 657. All right, but look at trend and look at momentum. Even pre-market momentum is very high, right? And so dips are buys until they're not. So watch your support floors. If you lose a support floor, a short while is all you need to give it to recover. If it does not do that, get out and then reset and wait. Absolutely nothing wrong with doing that. Good luck today, everyone, and I'll see you on the streams.